Good Monday evening. Welcome to PreciseAlgorithmTrading.com. It's Monday, February 26th, 2024, and let's dive into the markets for today. So, uh, our automated trading systems, this is likely to look a little weird. This is the Dow futures contract that we trade. This is an automated trading system, and yeah, we literally just turn it on in the morning, turn it off in the evening, and it trades itself all day long. And this is based on a 1 minute chart for what it's worth. So, um, chart patterns show up and things happen, and it triggers a trade, and then you either win or lose. And this is the net result of wins and losses. This is an equity curve. So, the reason I say it's maybe going to look weird. This one looks fine. We did have a trail off today. Today's a losing day in this one, and literally these are the trades for today. There wasn't a winner in the bunch, but you know, it is what it is. You have these streaks of winners every now and then, and that's what makes the winning equity curve. But then this is our Russell 2000, and this is where it gets weird because this is only showing data from 8/24 of 23 until 2/26 of 24, and our previous videos there's I think 15 months worth of data on here. This is I rebuilt my TradeStation platform over the weekend. It's been having some issues, so we reinstalled it, had to back everything up, and now it's downloading historic data. What's interesting is it's I don't know if it's that interesting. It's this is the same data. It's just a less of historic record than what we've had. I don't know how long it's going to take to get that other record back, but it's all the same math. So this is exactly like these trades that happened last week and the week before. They're the same trades. So, and today, so basically all I'm getting at is this looks different. It's not as much data, so it's strung out a little bit more. You see the humps and bumps more. Today's trade was one negative trade. So, and then the NASDAQ looks the same on this chart because it's showing 8/24 of 23 until today. But like I can't string it out to 14, 15, or 16 months like I was able to before. So hopefully all that back data gets loaded. It just takes time because I redid the system. So in any case, we're still on this pullback here. We had a nice pop up on Friday, and now we've given some back today. Our trades for today are here. So we had a couple little winners in there, but nothing to write home about, and a couple stop losses. So, but the good news is now that my system's back up and running better, I can do a little bit more. I got some new ideas, implementations to put in, and I'm trying to make these systems simpler. The simpler they are, the better they fire, the better they trade on their own, and that's really what I'm looking for. If there's a lot of system behind it, a lot of complex computer stuff, then it can get gummed up. And I want this thing to be able to totally run on its own and not jump. It's a computer, not have any hiccups during the day or hangups. The simpler the system is, the better it'll run. That's really what it gets down to. So, and if I happen to find a little hidden gem along the way and make this equity curve even like better and cut some of this dip out of when it does these pullbacks, that's a extra added benefit that can come from just doing a little bit more work on the system. All right. Next thing is let's look at the markets themselves. You can see here on the hourly chart, this is the S&P 500 futures contract. It's the E-mini futures contract, and it doesn't, don't get hung up on that. The E-mini futures of the S&P 500. If you look at this chart and we put up the spiders instead, that's the S&P 500 exchange traded fund, or if we just put up the SPX, they all generally look the same. I mean, they've got different valuations. This is the big one. The SPY is about a tenth of it, SPY. So this one's 5,200, or sorry, 5,000. If I put in SPY, it's 510. And if I put in the ES, it takes a second to flip back to the futures. It's also at 5,000, but this thing, it's a leveraged instrument. It's a little different. It trades 24 hours or almost, and so what I'm getting at is these instruments all reflect the same thing. It's the S&P 500 stocks, and so they mirror what's going on there as a basket of stocks. All right. So, anyways, what I was driving at here, this hourly chart you can see is turned to red. It's flipped down. That means our momentum is going down. You can see here on the stochastics down here that we've pulled all the way back to the lower reversal zone. Not that it'll necessarily reverse immediately like it didn't back here. It came down and then bobbled around for a while before it finally bounced. Well, now we're down here, and it could bobble around a little bit more. And if you know much about the markets, well, if you don't, I'm going to tell you now. We've come up, we've pulled back, we've come back up, we pulled back. This is a higher low than this was, and now we've broken this structure to the upside on the hourly chart. And this used to be resistance, especially when this price came up into it, and now we've jumped above it over here. We've pulled up and we've pulled back, and we're back here at this same level. And what's an axiom in the market, I think that's the right word, is old resistance becomes new support. So this breaks above it, and then this becomes the new floor. And it's a general price area. It is not, there's no hard line in the sand here. So, but at the same time, let's not lose track of the fact that this thing has gone on for a long time over here on the daily chart, and it's well extended. So actually a pullback in this zone here would make sense to come all the way back in here, possibly even fill this gap. This gap happened whatever that's been, 1, 2, 3 days ago. Come back here, fill this gap, although this market's been really bullish, so I'm not sure it'll make it all the way to fill the whole gap. So it could just come down and just mess with it. You can also see, I've talked about this in the past, that we go from one extreme to the next. So we go from one side of these, I'll call them white lines even though they're gray, white lines, to the other side of the white lines, go back again. We've come back all the way up to the one side of the white lines, and now we're back to the other side of the white lines. So the markets tend to do this on every time frame. You can see sometimes they don't make it all the way back. They just pull back to the mean or the average before they take back off again. Then even here it didn't pull back all the way to the white line on any of these tries here. But that's just because the market had so much energy to the upside, and you don't know that till it's over. I mean, so, but we are looking at any point now for like this daily chart to come all the way down to this other line. However, I think we'll see that show up in the point and figure charts that we get into next, or after we get done looking at these indexes. So that's the S&P. Let's look at the Russell. So the Russell's building up steam. If we zoom in here a little bit, it's actually coiling up. And I'm going to go ahead and draw a pattern, even though it's really not finished. Don't want it to stick there. I want it to stick there. Come across here and go from here to there. And you can see a triangle. This will typically resolve before it gets to the apex of the triangle. And whichever way it breaks, well, I shouldn't say that. Sometimes it breaks out one direction, fakes us, and then goes the other direction. Right now, this thing has been really bullish. It did this breakout a few days back, We pulled back, put in a new lower or higher low, and now we're just coiling in this. And if you want, or if you can see it, there's actually another little pattern in here, another little flag pattern. If you put these really together, so there's another little triangle inside. Could do this, and we should see it break out any time now, because it should break out before we get to the apex of this triangle. And this is a triangle inside of a triangle. So I mean, these triangles, especially in this type of an environment where we came from a big impulse wave and then we've pulled back, now this should be a continuation pattern to the upside. There's no guarantees, and I'm sure the news and some of the other things happening in the world could drive that, but again, I think we'll see some of that stuff show up in the point and figure charts inside the bullish percent indexes before these things really roll over and die. Right now, the Russell looks pretty powerful and to the upside, and the Russell is representative of small cap stocks, and small caps are hard for indexes, or for the big players like the big banks and the institutions to get in and out of, because they're not in the high liquid stocks. So they have to make big moves when they do it. The fact that they're actually making bullish moves right now is pretty indicative of a bullish market and a bullish sentiment. And I think we're to the point where that bullish sentiment is going to, it's possibly going to get irrationally exuberant, because we're up here at 39,000 on the Dow. I just switched charts, and I'm expecting us to hit 40,000, just because that's a psychological level that's never been hit before. And I mean, they've been talking about Dow 40,000 for, I think, 10 years, saying eventually it's going to happen. It's going to happen while we're here. I mean, it's taken a long time and a lot of back and forth if you go back on the charts. But that same thing happened when we hit Dow 30,000, for what it's worth. It hovered around 20,000 for a long time before it ever got up there. And we had a lot of back and forth. We had some recessions in the way and all sorts of other stuff. And you can see that literally for every one of those psychological levels. All right. So that's the Dow. Everything went down a little bit today, by the way. The Russell, the S&P, the Dow, and the Nasdaq. Let's look at the Nasdaq since we'll wrap this up. So yeah, the Nasdaq looks pretty strong here as well. We are up here around, so looking at this old level where the Nasdaq came up to back here, that was on February 12th, and then on February 23rd we got back up to it and actually exceeded it a little bit. That's not enough to call that a new higher high, by the way. I guess technically you could say it is, but that's really, there's just a big wick that went up there, and it really didn't stay there for very long. And then now we're coiling in this area. So this is a build-up type of an area, and as long as we don't get a breakdown too hard, I'd expect this thing to break out through this upper level that's really shown right in this whole zone, because this is building up energy to be able to, continuate and make a continuation pattern is what's typical at these types of levels. And I think that's it for the main indices or indexes, depending on whether you like grammar or not. The transports, what are they doing? They're relatively bullish. They look bullish. They're green, but they're really just coiling up back and forth, driving everybody nuts that wants to trade the transports. And what do they look like on a weekly chart? The weekly chart is good. It's green. So the longer term, or the higher time frame, is bullish here. The daily time frame is bullish, and we need to see something significant, some break out of this area and put in a new higher high. We've had this series of lower highs and lower lows. Now we got to like break that polarity back to the upside if this thing's going to take off. But coiling up here, that can go on for a while. Oil, what did it do today? So USO went up 1.21%. We got back a lot of what we gave back last week. This thing's been just really walking back and forth, but not breaking down. The USO contract itself for the futures, I'm sorry, the CL, same kind of thing. Not giving us a whole lot more guidance there. And just for fun, I'm going to look at the weekly and see what it's telling us. The weekly is certainly not falling hard. It's, if anything, it's starting to level off and possibly go sideways. So you can see we had this breakout pivot back here. This is a weekly chart, so this has been a few weeks back. In fact, it's a couple months at this point. And that's 9/25/23. So this breakout higher came after this big fall, and now I'm just eventually expecting to continue having higher highs and higher lows until we get higher than that, which might be alarming for anybody that cares about the oil market, but we're just trying to trade and make money off of it. And this is a rounding pattern. After this works both directions. This is a bottoming rounding pattern. It appears you get the same kind of thing in a rounding topping pattern, just like it is over here on the hourly chart. So in this case, you're seeing both a rounding pattern at the top and a rounding pattern at the bottom. The hourly chart is not as big a deal as the daily, if that makes sense. So, and then finally, let's look at gold. Gold is doing a very similar kind of looking thing than the oil is. Commodities generally, they don't always walk together, but they sometimes do. And this actually is shaping up to be looks like a decent trade maybe. Although it has been a hard one because this lower pivot here, once I got profitable, I basically I start moving over here to my hourly chart and using the pivots over here to trail my stop, and it did take it out. So that's been a hard. It hasn't been able to get up and go in any kind of a real nice breakout trade. Like if you look at Bitcoin, it gave us this trade signal here, and then it just took right off. This is what we really want to see, but you just can't. I can't always. You don't always obviously get what you want. You just get what you take what you get. So, all right, that's enough of that. Let's flip to the stockcharts.com and type in bullish. Look at the bullish percent indexes and see what we get. So the Dow went down 2 boxes today, added 2 new O's, and if this breaks and makes a new O tomorrow or in the next few days to the downside, then that is a point and figure sell signal. And what's that mean? Well, it's going to be more likely to be able to fall is what it boils down to. So it's interesting in light of what I just said about the Dow getting to 40,000. So we will see. Here's the NYA. It actually went up by 0.06, which is hardly anything. The transports flipped into a column of X's, or I'm sorry, flipped into made 2 new X's today. Went up 8.33%, And if this one adds a new X in the next day or two or whatever, or before it flips over to a column of O's, then that's a point and figure buy signal. And you can see we had a point and figure sell signal where the O's exceeded the previous column of O's to the downside, and then would flip right around and make a new column of X's and possibly a new point and figure buy signal, which is just the kind of market we're dealing with right now. The NASDAQ went up by 0.58% today, so nothing to write home about. The S&P 500 went up by 1.21%. The S&P 100 went up by 1.56%. And the NASDAQ 100 went up by 3.12%. So we have a very mixed market, and that's actually, at this point, I've been talking about it, that appears to be pretty bullish if you wrap it all up in a bow. So that's what I got for tonight. Hope it helps, and we'll talk to you again tomorrow night. Take care.